Welcome to the deep dive. Today, well, we're jumping into some pretty surprising growth figures from Choice International Ltd. They're really making waves in India's financial services space.
Absolutely. A diversified player, and their latest numbers certainly caught my eye.
Yeah, so our mission today is to, unpack their Q1 FY26 results. That's the quarter ending June 30th, 2025, with the results just out on July 21st. We want to cut through the data fog and find those key nuggets.
Understand what's really driving this expansion, right,
Yeah.
across all their different businesses?
Exactly. And just so you know, everything we're discussing comes straight from their official press release, the investor presentation, and the board meeting notes.
Good, solid sources.
Okay, so let's get into it. Choice International is reporting some really eye-catching numbers right off the bat for Q1.
They really are.
Total revenue hit ours, 237.95 crore. That's a solid, 15.55% jump year on year compared to Q1 last fiscal year.
Which is strong growth in itself.
But the profit side, wow, net profit after tax, the PAT, it surged nearly 50% year on year. We're talking ours, 47.96 crore, up from 32 crore.
And look at that margin improvement that comes with it. The PDT margin improved by, what, 462 basis points?
Yeah, 4.62 percentage points, landing at just over 20%. That's quite a leap.
It really is. And what's fascinating here isn't just the top-line growth, though that's good, it's that significant margin expansion. The EBITDA jump is even more stark.
Right, tell us about that.
Well, EBITDA saw a huge jump of almost 50% year on year, too, hitting ours, 86.80 crore. And the EBITDA margin expanded by a massive 820 basis points.
8.2 percentage points, up to 36.48%.
Exactly. Now, okay, we should acknowledge there was a slight dip compared to the last quarter, Q4 FY25.
Sequentially, yeah.
Sequentially. But for the start of a new fiscal year, that strong year-on-year growth, especially with those margins, that's the main story. It suggests some really effective underlying operational efficiencies kicking in.
And management seems to agree. Kamal Padar, the MD, talked about encouraging progress across all business segments. He put it down to their focus on operational excellence and being customer first.
Which sounds good, standard management speak, but the numbers seem to back it up here.
He also mentioned, wanting to strengthen their presence and accessibility across India, which, given this kind of growth, how hard is it to maintain that customer-first focus while expanding so fast?
That is a really critical question. It's the classic growth challenge, isn't it? Achieving this sort of margin improvement while expanding rapidly and claiming customer centricity, it points to a very deliberate strategy.
Suggests they're not just chasing volume blindly.
Precisely. It indicates strong execution, probably significant investment in their processes, their tech, their people, to build something sustainable and profitable.
Right. So here's where it gets really interesting for me and hopefully for you listening too. Choice isn't just one thing, right? They're diversified.
Very much so.
Their revenue split is roughly 60% from stockbroking, about 24% from advisory services, and 16% from their NBFC arm of the non-banking financial company.
So multiple engines driving the train.
Exactly. Let's peel back those layers, starting with broking and distribution, the biggest chunk. They've seen some impressive client growth here.
Yeah, numbers are strong.
Demat accounts reached 11.50 lakhs, that's 1.15 million, a huge 29% jump year on year.
Wow.
And the client assets under stockbroking, that's up 16% year on year too, reaching 47.8 trillion rupees. That number always sounds massive.
It is massive. And importantly, they're activating these accounts.
Good point. Over 241,000 active accounts, up 18% year on year. And this all seems to fit that bigger picture in India, doesn't it? The explosion in Demat accounts generally.
Absolutely. I mean, think about it. India went from, 190 lakh Demat accounts back in FY10 to nearly 2,000 lakhs in FY25.
Incredible growth.
And the projections are heading towards almost 8,000 lakhs by FY30. So Choice isn't just riding this wave. Their 29% growth in accounts suggests they're actually capturing a good chunk of it, maybe even outperforming slightly.
So their digital platforms, their reach to younger investors, it must be working.
Seems highly effective, yeah. They're connecting.
Okay, moving on. Wealth products. This is where the numbers just explode.
Yeah, this one really stands out.
Assets under management, AUM, for wealth products, a staggering 443% growth year on year.
443%.
Reaching ARN's 4,769 crore. And it's not just AUM, their SIP book systematic investment plans, that's up 78% year on year. Transaction counts up 56%.
That's phenomenal growth. And it connects directly to that huge trend in India, the financialization of savings, people moving money from, traditional stuff like gold or real estate into financial markets.
And Choice is clearly tapping into that.
Big time. Especially, it seems, with high net worth individuals, HNIs, and corporate clients. They mentioned the merger of Arete Capital and Choice Wealth helping here.
Right, that merger seems key.
It looks like it allowed them to really deepen their relationships with larger corporates, family offices, trusts, the UHNIs. You see their corporate and ultra HNI client numbers ticking up. It's a smart strategic play to capture that more sophisticated end of the market.
Makes sense. Okay, what about insurance distribution, another growth area?
Definitely not lagging. They generated R76 crore in insurance premiums. That's up 62% year on year.
And more policies sold too, right?
Yep, over 39,000 policies sold, which is a 46% increase year on year. But what's really striking within insurance is the retail side.
Oh, how so?
Well, their corporate business premium grew nicely, 36% YoY. But the retail business premium generated, that jumped 151% year on year.
Wow, 151%.
It suggests they're really making inroads with individual customers. You see it in the policy numbers. Health and travel policies sold shot up over 250% year on year.
250%.
Yeah. And strong growth in life, up 65%. And motor, up 128% too. It speaks to a successful strategy of reaching the sort of average Indian consumer who's increasingly looking for insurance.
That's impressive reach. Okay, let's shift gears to their NBFC segment, the non-banking financial arm.
Right. So the total loan book here is Rs 745 crore. That's up a solid 64% year on year.
And the retail portion of that.
Even stronger growth there. The retail loan book hit Rs 596 crore, which is up 108% year on year.
He doubled in a year.
Pretty much. And crucially, this segment swung back to profitability. They went from a small loss last year, about 1 crore, to a profit of over 7 crore in this quarter.
That's a significant turnaround. But with that kind of rapid loan growth, especially retail, the obvious question is asset quality. How are they managing the risk?
That's exactly the right question.
Yeah.
And their presentation actually spent some time on this. They highlight having pretty robust underwriting processes. Things like real-time credit bureau checks, checking multiple databases, geotagging all their branches and customers apparently, and they run cashless operations, which helps with KYC compliance.
So, tight controls.
Seems like it. Their net NPAs are reported at 2.25%, and their net interest margin, or NIM, actually expanded by 85 basis points to 11.85%.
That's a healthy margin, especially while growing the book so fast.
It is. It suggests they're managing that balance between aggressive growth and prudent risk management quite well so far. And this is crucial because they have big ambitions here.
Right, the MSME lending and green finance targets.
Exactly. They're targeting an MSME loan book of, 25 billion rupees by 2030 and 10 billion in green finance, focusing on rooftop solar. So maintaining that underwriting discipline will be absolutely key.
Makes sense. Okay, next up, advisory services. They seem busy here too.
Yeah, a solid order book of ours, 586 crore. And they picked up new government advisory mandates worth 130 crore just in this quarter.
Any notable projects?
Quite a few interesting ones. Things like setting up district strategic units in Maharashtra for a World Bank program called Mahastride, consultancy for urban local bodies in Odisha.
Oh, okay.
And they're involved in computerizing primary agricultural credit societies, PayCS, in Bihar and Karnataka. Plus, they're the project monitoring unit for the amended FARNet program.
So quite involved in government digital transformation and rural development projects.
Very much so. These aren't just advisory contracts. They position Choice as a key partner in some major national initiatives. Think about digitizing rural credit societies or expanding broadband via FARNet. It shows deep public sector understanding and execution capability.
Interesting angle. And finally, within their segments, investment banking.
Right. They're a SEBI-registered Category I merchant banker, so they handle IPOs, both main board and SME rights issues, open offers, the usual range.
What's their edge here?
They talk about strong deal origination, strict compliance, and robust execution. But I think the proof is in the pudding, right?
Us.
Well, they highlighted some recent IPOs they managed, like Prostarm Infosystem and RNFI Services. Both listed well above their issue price and are trading significantly higher now.
So successful listings.
Exactly. It suggests the market has confidence in the deals they bring and their ability to manage the process effectively. It builds credibility.
Okay, so we've seen the different engines broking, wealth, insurance, MBFC, advisory, investment banking, all contributing. But, beyond the specific segments, how are they actually building this momentum? Let's talk strategy, expansion, tech.
Right, the how. Because the what is impressive, but the how tells you if it's sustainable.
So first, their physical footprint. It's grown a lot. They're now at 208 locations, which is up 65% year on year from 149 branches.
That's significant expansion.
And they're planning to add another 100 locations just this fiscal year, FY26. The ambition is a presence in every district in India within 3 years.
Wow, okay. That's ambitious. And complementing that physical reach is their associate network. Right.
Yes, the Choice Business Associates, or CBAs. This network has just exploded. They say it's seen a 56x increase since FY19.
56 times.
Yeah. Now nearly 59,000 trained business associates. This network is clearly their key to reaching into those unserved and underserved areas.
It's a powerful hybrid model. Bricks and mortar branches combined with this huge distributed sales force offering the whole range of products. Very smart for penetrating deeper into India.
And then there's the digital side. Huge focus here, too. They're handling over 23 million API requests a day. Their app downloads are over 2.5 million.
The scale is impressive. But what about the features? Are they innovating?
Seems like it. They've rolled out some interesting user-focused tech.
Go on.
Well, there's something called hedged integration. It offers pre-built options trades where the risk is apparently managed for you. Designed for instant execution, simplifying complex strategies.
Okay, that could lower the barrier for options trading. Interesting.
Then there's StrikeX. This sounds like it's aimed more at pro traders, a platform with tools like a price ladder, smart rules, triggered actions.
So catering to different user segments. Makes sense.
And this one, Fin Reels, sounds quite innovative. Short financial videos like, TikTok or Instagram Reels style.
Okay.
But with buy-sell buttons directly in the video. So you watch a short clip about a stock or a fund, and you can act on it immediately.
Huh. That is interesting. Blending content, education, and execution right there.
Yeah.
That could be a really effective way to engage, especially younger investors, and boost financial literacy, maybe.
Yeah, potentially a game changer for engagement. They also mention a unified global search across all asset classes and a new, cleaner UI focused on speed and simplicity.
But they're not stopping there.
Apparently not. Upcoming stuff includes lightning-fast trading with a next-gen order management system and risk management system, plus a hyper-personalized user experience.
So, continuous tech investment, crucial in this space.
Definitely. Now, staying on the strategic side, there have been some significant investments and subsidiary moves.
Right, it's strengthening the structure.
They allotted 6 million shares to Plutus Wealth Management, converting warrants and raising 135 crore.
Injecting capital.
Yep. And there's a proposed acquisition, 50% of Choice Insurance Broking India for about 62.5 crore, though that needs IRDAI approval.
Consolidating their insurance broking arm, potentially.
Seems like it. And Choice AMC, the asset management company, became a wholly owned subsidiary. That involved investments totaling over 560 crore.
Big move into full ownership of the AMC.
And they put another nearly 100 crore into Choice FinServe Private Limited. Plus, looking ahead, they've set up 3 new wholly owned subsidiaries specifically for green energy.
Ah, linking back to that green finance ambition in the NBFC. Choice Green Energy, MH1, MH2, and Solutions.
That's them.
So these moves, taken together, they signal a clear strategy. Deepen the core financial services footprint through consolidation and investment, strengthen the capital base, and make a serious structured play into the growing green energy finance space. It's very forward-looking.
Okay, nearly there. Let's quickly touch on governance. The board meeting on July 21st reappointed 2 independent directors for a second 5-year term.
Who were they?
Mr. Subodh Kumar Agrawal, he's a chartered accountant, former ICI president, and Mr. Sandeep Kumar Singh, who has a background in rural development and is interim chairman at IAM Kashipur.
Okay, so experienced hands staying on board. That suggests stability and good governance. Having diverse expertise from pure finance to rural development is also valuable given their wide-ranging activities and expansion plans.
Right, and it fits with their mention of ESG initiatives too. Energy efficiency, workforce diversity, services for visually impaired customers.
It all paints a picture of a company trying to build responsibly alongside the rapid growth.
So let's try and wrap this up. Choice International's Q1 FY26. It really shows strong growth, doesn't it? Driven by that impressive margin expansion across its quite diverse business segments.
Absolutely. And it's underpinned by these clear strategic moves, expanding physically, building that huge CBA network, investing heavily in user-friendly tech, and making significant corporate investments to consolidate and enter new areas like green energy.
Yeah, it feels like a company that's not just riding the wave of India's financial growth, but actively shaping its position within it.
Exactly. It shows a company that's not just focused on today's numbers, but is strategically investing heavily in technology and reach for the future. It speaks to a pretty robust model aiming to capture a bigger slice of India's evolving financial landscape, blending traditional reach with digital savvy.
So here's a final thought for you, our listener, to chew on. Given Choice International's really ambitious targets, especially for MSME lending and that green finance piece, and considering their big push into digital platforms, how do you see this diverse business model playing out in India's rapidly financializing economy? And maybe more specifically, what doors do you think new tech like FinReals actually opens up for bringing more people into the financial fold, perhaps improving broader financial inclusion? Something to think about.